Superclusters is where we demystify the secrets, stories, and tactics behind the money that moves the venture capital world.
Happy holidays and welcome back to LPAC, where we bring on previous guests to answer your questions on how to build your venture fund. This time, as part of our holiday special series, we've got someone with the most frequent flyer miles on this podcast, as I imagine at some point he'll probably cash in, as well as a fan favorite, Ben Choi from Next Legacy. And just as you're thinking about New Year's resolutions, this is the forward-looking episode where our GP guests ask Ben on what they should be doing today to prepare for the eventual future of their fund. If you're a fund manager and need advice, you can submit your questions to me across any platform, and maybe we'll have you on the podcast next. So, without further ado, Ben Choi. But people love you. And I was in Riyadh about 3 weeks back. For FII.
Yeah.
And I was doing a thing on stage and...
Cool. Tell me more about that.
So I was invited out by a friend.
The story starts with, I was on a stage in Riyadh a few weeks ago. Like, yeah, that's interesting.
It was really fun. It was my first time in the region. I had never been to the region before.
Yeah.
I didn't know what to expect. Obviously, you hear a bunch of rumors about the space in general, but if you go as a speaker in FI, they give you like the red carpet treatment. Like they picked me up at the airport, they checked in at the hotel for me, they walked me around. I literally felt like I don't deserve this. And when we left, there was like this, they drove us to a private lounge that it sounds like only FII folks have access to or something. And then we had like a like deluxe check-in experience where like they just sat us down, they fed us things, or like, just wait here, we'll do all the check-in, all the baggage checks for you.
At the airline? At the airport?
Yeah. At the airport.
Wow.
And then after you're done with that, you go into a special lounge just for what seems like FII speakers. And they feed you, they give you all the stuff. And then when your flight is ready, an attendant comes over, picks you up, and sends you over to your terminal.
That's amazing.
And it was just so foreign to me. I've never had that kind of treatment before, at least in respect to like a conference.
Yeah.
And I thought it was just really fun, and just I think I got a very rose-tinted lens experience for Riyadh in general.
Yeah, if you go back, you're not going to have that, and then it's going to feel like you're...
Yeah, it's going to be very different. Because I come back and tell my parents, like, oh my God, all this stuff happened. And she's like, oh, can we experience that too? She's like,
yeah.
And I'm like, I don't know. Like if they invite me up like for FII, we'll like, hopefully we'll see if we can get you on stage as well. But other than that, like I don't think we'll have that. But the reason I bring that up is there was a session I was hosting around family office conversations. And that said, I was at FII and we did the session, and then some people came up to talk to us off stage and all. And one of them cited your episode about what is the most underestimated kind of role at a venture firm. And he said the culture keeper. And he said culture keeper in particular. He didn't remember your name in particular, but he was like, he remembered the culture keeper thing. And I was like, oh, wow,
that's cool.
I'm in Riyadh. People hear about this.
Yeah, that's cool. That's really neat. I like that. You do this professionally. I dabble in social media, only on LinkedIn.
You're not being kind enough to yourself.
No, well, I've consciously not over the decades engaged in like Twitter or Facebook. It's just kind of not Instagram. It's not been my thing. I've posted it in those, and I always, whenever a new service comes out, I always claim Benji Choi is my handle. I grew up Benji for my first 6 years of my life, or 10, something like that, 6 years of my life. And so that's always my username. On a Facebook, yes, you don't. Eventually, we claimed usernames, but we didn't have usernames originally for the first long time. Anyway,
there's a bunch of Roman, like not Roman numerals, but there's a bunch of numbers. Yeah,
just numbers. That's right. Anyway, I've not been a big social media poster or consumer, but LinkedIn has been more. But I think actually when you were in Riyadh, I was at a Coffin Summit. We were celebrating the 30th anniversary of the Coffin Fellows
in London.
And in London, yeah. This is the following week. And there were like 500 VCs there. So it was a big thing. People came in from all over. And I did the Coffin Fellow program 20 years ago. So I was close to those few classes around me. And I've stayed in touch over the years with the organization and with fellows. But, there are there are around 200-ish fellows in the current few classes that I haven't met most of them. So I was at the event, at the cocktail party, and somebody walks up to me who I not yet met, and they introduced themselves to me, and it was just 3 days after Halloween. I had posted myself on LinkedIn dressed up as Jensen Huang for Halloween, and this stranger walked up to me and said, like, best Halloween costume ever. The only place I posted it was on LinkedIn. That one a few days ago, or a few days prior. But definitely oh wow, it went out. I guess it was an audience that is my my network, I guess, but it's somebody who I'm not directly connected to, and we're not linked. We're not friends on they're not connection on LinkedIn, and I didn't tag Coffin or anything, but they saw it and they connected. It's like when they connect with you in real life. Like, oh wow, okay, we've that persona out there is actually connected to real interactions. It was fun.
They've met their hero. I wouldn't underestimate your following on LinkedIn. I also thought your Halloween costume was insane.
Oh.
We might pull this up in the actual episode and show it, but it was of Jensen, and the goodie bags, or like the treats in which you were giving out, was very on theme as well.
Thank you. I was pleased with I was pleased with I had the Jensen outfit with the black leather jacket, which is like a 20-year-old leather jacket that's been sitting in my closet. I've worn it like all 5 times in my life. And so I was like, oh.
I mean, to be fair, that's probably like how many leather jackets that, Jensen has sitting around. Like, he has his new ones, he has his old ones, and
he must have like a house full of them and a staff who must rotate them. I don't know.
I heard in an interview once upon a time that Jensen did that his wife tried to like be the fashion person for him, and she had effectively given up on him, and she was like, you'll look good regardless in a leather jacket. Like, you can wear whatever you want underneath, but just wear a leather jacket. So she's the one who bought all his leather jackets.
Oh, I like it.
That's what I heard on a I think a podcast or interview of some kind that he was on. I was like, oh, he doesn't have someone buying it for him. It's literally his wife.
That makes sense. I don't know Jensen. I did have a chance to meet him and chat with him, and it was an evening event, and I remember asking. I had asked him for parenting advice. So I was more interested in him as a person than obviously all the business stuff. And that was I think when NVIDIA was a lowly $1 trillion company. So like it was like
just a lowly trillion,
like 2 years ago, right? But he went to this event. Before he arrived, like, his security detail came in. They closed all the doors. All of a sudden, the doors closed. These men in suits came in. Like, they canvassed it. Like, they made sure that the place was secure. He came in, but then when he was there in person, he was completely like engaged, personal, like no security buff around him. Really, like, was talking to it was a founder event, and so like it was this interesting contrast of, you'd think he has a staff. Well, he has a security staff and people around him professionally. I remember asking, like, so what are you going to do for dinner? Like, what does dinner look like? And he says, like, well, when you go home, we're going to open the fridge. We're going to figure out some leftovers. We're going to do the dishes. Like, my wife and I will have dinner. Like, it was a very, like, there was no staff at home. There's no, like, cook, chef. Or, like, I was very surprised that his home life is, I guess, you can make a choice to live that way. He had started that day. He had started that day in New York City. He had flown in from a different place. Like, he definitely is all over the place. But apparently, his home life is pretty down to earth, which I was very impressed by.
I've never met him, but he seems like in all the kind of public talks that he does, just like a very relatable individual. Where I think on his LinkedIn, he was like a dishwasher on Denny's or something.
I had 3 jobs: dishwasher at Denny's, and then he had some job, I forgot where, and then he left to start NVIDIA, and that's it.
Yeah. And that was it. And he's been at NVIDIA ever since the 90s.
Yeah.
Yeah.
30 plus years. It's crazy.
30 plus years. We have our first caller in the room.
Okay.
And we can jump straight into it. People will have tons of questions, and we'll have some time in the sizzle reel after, and to talk about other things, but I don't want to keep Miguel waiting for too long. Miguel, what's up?
Hey, Miguel. How's it going?
Hey, Kulik. Hey, Ben.
Have you guys met before?
No.
Good to.
Ben just gives such a warm hello, and oh, Ben just knows everyone, and that's what it is. Miguel, thanks for coming on.
Thank you for the invite.
Good to meet you, Miguel.
Yeah. So, for those who are unfamiliar with Gilgamesh and everything and the awesome things that you're doing, which, by the way, I would highly recommend Miguel's podcast as well. What are you up to? What is Gilgamesh?
So we are an early stage VC. We come in at the pre-seed and seed stage for the most part, and we focus on financial services broadly, right? It's hard to define fintech exactly, but it's any company that is modernizing some segment of financial services, right? We're a small team. We're an emerging manager. We're on Fund 2, and we have made about almost 50 investments over the last 5 years. So I've been pretty active. The latest one was a couple of weeks ago. In parallel to all of this, and thank you, David, for the plug, for the last almost 6 years, I've also been podcasting, just like you. And it's been a lot of fun. I'm nearing 400 episodes. Total, just trying to bring the most interesting voices in fintech and financial services, right? Mostly founders, because let's be honest, founders are far more interesting than investors, but also some VCs and
Founders to VCs and VCs LP. Whoa.
More words. I did that.
And I've decided to choose the LPs to highlight in this.
What do you do, David?
I know, what am I doing? I'm clearly not figuring out SEO, but I do want to mention, and Miguel was one of the 2 people I'd gone to before I started Superclusters, and we were introduced by Jason at Foundation, and I asked Jason, I'm starting this pod. I don't know how to think about it. I don't have zero experience thinking about everything. He's like, dude, you got to talk to Miguel. He might not be free. But you can ask him if you have any podcast questions. So I ask Miguel a very simple, how should I think about starting a podcast? Are there any things I should be aware of before I start it? And Miguel gives me this huge laundry list of bullet points. I was here's everything you should be considering. And I'm just we don't know each other, but I love you already. It was love at first sight from all the bullet points and the thoughtfulness in that. But I just want to say, Miguel is far more experienced in this regard than I am. 400 going on, probably soon 500 episodes. He's had some incredible guests. So, what are some of the guests you've had on, Miguel? Because you've had on some incredible folks.
So by the time this comes out, the latest one that I just recorded 2 days ago is the CEO and founder of Bill.com.
Renee III.
Exactly. He's a legend. We just had an amazing conversation. He came to New York. We did it in a nice studio. But that's just the latest one. I mean, I've had the CEOs and founders of, all the big guys, Ramp, Rex, SoFi, Figure, Nubank, Kaspi in Kazakhstan, Konto in Europe, and the list just goes on and on and on. And I just have a lot of fun doing it. It's addictive, to be honest.
I love you brought up Renee as your most recent guest, and he's just a great example. I mean, of the long road of discipline that it takes to be a successful founder. And you're 400 episodes into a podcast. You got to do something and keep on doing it. Especially when nobody's paying attention to achieve success. And Renee, started Bill.com 20 years ago. It was a long road to what's an incredible business. But it's not overnight at all.
Not at all. And what I love the most out of that conversation, regardless of what's going on with the company and the stock will go up and down. He's a principal leader.
Yeah.
Right? And we need more of those.
Yeah, absolutely.
All right, in before Ben starts his own podcast. Okay, we could go on forever. I love both my conversations with both of you, but Miguel, you brought us a question, or less so me. You brought Ben a question here. What is the question you have for Ben?
Ben, as you well know, over the last few years, emerging managers have had a more challenging time raising capital. That's just a fact.
Mhm.
And so
Mhm.
when I talk to my peers, right, it's the conversation seems to be around Fund 3, right? There is this perception that Fund 3 might be perhaps your most important one that you raise, because after Fund 3, you have emerged. I think after Fund 3, you're not an emerging manager anymore. When you are evaluating specifically Funds 3, across the board, what are you looking for? What are some good signals and data that you look for and ask for when you're evaluating a Fund 3?
I'm going to translate I'm going to answer a different question, but just by a little bit, Fund 4. And so we actually, we've been investing with emerging managers for 20 years, 18 years formally. Andreessen Horowitz Fund 1 was one of our first emerging managers. And for us, the strategy was rooted in our belief that the venture industry is being disrupted by technology as much as traditional industries. And we've seen that, right? In the last 20 years, we've seen venture change. So we've always had this emerging manager strategy. And for us, what we've sort of come to, the strategy that we've developed over time is that the first 3 funds, not just the first 2, the first 3 funds are really that working out process where most pragmatically, there's very little performance to be seen by Fund 3. And so it's actually Fund 4 for us, where we are in some ways we say we're forcing the question to hold up an emerging to hold up a manager as no longer emerging and now needs to earn its own place in the portfolio. So if it's okay, let's talk about Fund 4. But I think it's the same question, right? And in some ways that actually is part of the answer that it's hard by Fund 3, which is 4 to 6 years into the life of a firm ish, like it depends, maybe 3 years if the cycle's been fast, when it's easier to raise, when it's harder to raise is a little longer. But that has more to do with how easy, LP demand rather than actually anything the GP doing. By the time that you're raising Fund 3, at best you have some companies in Fund 1 that are looking good and maybe not. And the challenge for LPs is usually the best story is like 1 or 2 companies working really well. And it's hard as an LP to know how much of that is luck versus any kind of repeatable pattern, especially if the strategy or the fund size that people have changed, of course, over the course of those first few funds. So that's why Fund 4 is actually the framing that we use to think about so that next the material change from emerging to more established. I'll say also that it from Fund 4 to 5, it's not like it's like just simple. It doesn't necessarily just automatically happen going forward either.
And so just one follow-up, if you allow me, David. For Fund 4, maybe tell us specifically what are some of those markers that you're looking at. Obviously, sounds like companies are working out across more than just one fund, right? But when it comes to distributions or when it comes to other metrics, what are your expectations?
Yeah, I mean, we want to see there's some story for a firm. It's how they source, how they pick, how they add value. It's a little of everything, but if it's a little of everything, then it's nothing. So there's a thing that we're looking for that is what's exciting about this story today. And what we're looking for is not just good performance in interesting companies, but good performance in companies that were sourced, selected, and supported with that thing that is interesting, that kernel of insight, the thing that's catching our interest for Fund 4. So it's that continuity of a story that we can look back and understand. If we can't get that, then it's not very interesting, not an interesting conversation. I think the hard part of the dance of fundraising is when you do have that, the LP has to figure out, is this a rationalization of the past, or is this actually what happened? Like, was this known at the time? Because if it was, then we can have some confidence of the future going forward. But if it's just a rationalization of some randomness, then it's hard to know. It's hard to make the bet that fund 4 and 5 and 6 will benefit from the same pattern.
If I might jump in here, what are some of the through lines in which you see to show that there's evidence of, say, predictive behavior instead of, putting a story on randomness?
Let's see. Through lines, you can find them in one of those things. Like some GPs have a very specific way of sourcing. They have a podcast, and they've been doing it for not 10, not 20, like 400 freaking episodes. A lot of episodes. Like that's interesting. Now the question is, is there actually a connection of that to sourced deals or entrepreneurs or value add to the portfolio, right? Like that would be an example of like a through line that you could look at and like objectively is actually out for the world to see. It's actually there. It's not just a story that somebody's telling us. That'd be an example of an artifact or a through line that we could kind of see across the portfolio. The other dimension is just portfolio construction. Is there a consistent way that they've invested? And for some VCs, that's a core way of how they build their firm. Others don't have that benefit because they have to start at a different scale or and a different LP base than they are trying to get to. And that's okay. We have to just look at all the nuances. Nothing's ever like a simple, clean story.
There's some versions of this. I spend most of my time with emerging managers, not established managers or people going on to be established, so to speak. But I find it helpful for those who are on that precipice of Fund 3, Fund 4 to go back and look at their Fund 1 and Fund 2 decks and how much those have iterated. Because sometimes you're like, oh, like you can tell if they've, like a lot of this is luck, right? But part of this is also, did you have your eye out in the world, even in Fund 1, looking for certain things? You didn't know necessarily what it'd look like, but there's some semblance of you were keeping your eye out for those things from an early day. And any other follow-up questions, Miguel? Or do you think Ben answered your question, maybe not on Fund 3, but a Fund 4? Actually, pause there. Can you decompose why Fund 4? Is it like the number of years, like you're waiting for like 8 to 10 years later, or is there another reason to why Fund 4 as opposed to Fund 3?
Yeah. So Fund 2, your Fund 1 portfolio, half of it hasn't raised another round. So it's very hard to show your performance. You're in the J curve still. By Fund 3, when you're raising Fund 3, regardless of the number of years, you hopefully have some companies in your first portfolio that have had some initial success. If they're rocket ships, they raised a couple rounds. That would be like a rocket ship, right? But it's very, very rare for a fund to have any liquidity or exits. So nothing's actually gotten enough signal from the market or grown to the scale where you can point to it and say, oh, they identified something. It doesn't matter what stage you are, like that early enough in time where we can see performance on a single investment, even by Fund 3. It's pretty unusual. The exception would be 2019 vintage funds that raised Fund 2 in 2020 and raised Fund 3 in 2021, right? Like 1 year funds, and you deployed really fast, and LPs just couldn't get enough venture, so they're just carried in. That has as much, again, to do with LP demand than what was happening in that portfolio. But by 2021, if you made your 2019 investments or 2020, the market went crazy. And so you could see this overnight kind of performance in your portfolio. As an institutional LP focused only on venture, for us, we did not dramatically increase our pace. Actually, we didn't change our pace at all for LP investing, because we've seen this we've seen the movie a few times where both on the way up and on the way down, neither is a great time to accelerate or decelerate your LP commitments. But the market can accelerate, and it was in 2021. That was a good time to raise your Fund 2, 3, 4, 5, or 1. Any fund in that year, 2020, 2021.
Yes, very different environment. And to your last comment, as one of my mentors told me, is just you got to stay consistent and invest through the cycles, right? No matter what's going on, just keep finding good entrepreneurs.
Yeah. I'm curious for you, Miguel. How are we on time, David?
We can go a little longer.
Okay. For you, Miguel, who's your audience for your podcast, and how do you have a good sense for who your audience is?
Yes.
As I said, incoming podcaster Ben.
Steve and I were having like a parallel conversation on do you actually know who is watching your stuff or listening to your stuff?
Yeah. It's one thing to know the demographics because the platforms give you that, but it's another thing to know their occupations and their interests, right? I've been doing this for so long that I've gotten a lot of feedback and I have a good sense. And my number one audience is builders or aspiring builders, right? So there's a lot of founders, particularly I would say pre-series B that tune in. There's employees of fintech companies across the board, early to grow to IPO. And many of them are aspiring builders, right? So what's happened to me more than a couple times, I've interviewed someone, then people have reached out to me saying, "Oh, that was a great interview. Let's meet." I'm in the industry. A couple of years later, they start a company, right? And so that's the number one group. The second is, I guess, investors, right? And we have early stage investors, VCs, growth, to also some equity research coverage analysts who tune in because they also want to know what's going on in the industry, right? And the beauty is that kind of also goes around Gilgamesh and the fund, and that example I just gave you. We've invested in a few of those that later started the company. So it's all pointing in the same direction, right? And when I'm recording, I always tell my guests, the audience is builders, right? Not just founders, but builders.
Love it. So interesting.
So much juicy bits. We can do a podcast episode here in of itself. Miguel, thank you so much for coming on, and hopefully Ben answered your question on what a Fund 3/Fund 4 would look like.
Thank you for the invitation, David, and thank you, Ben, for answering my question. And I learned a lot.
Thanks. Yeah, well, likewise. It's great to meet you and super interesting. Appreciate it.
Likewise. See you
Take
later.
care, Miguel.
Keep staying awesome. It wrenches my heart to ask this because this is not why I started the podcast. I didn't start this channel to become the largest podcast out there. I started this podcast to answer the questions that I had, that we all had, surrounding what it means to become a true capital allocator. But the undeniable truth has become that the more of you who follow this podcast, the better the guests we can bring on, and the more interest there is to uncover the truths that this world hasn't heard before in the scope of investing. And so I know more than 70% of you who are watching and listening haven't subscribed, but it would mean a lot to me if you could cast your vote towards the future of this podcast with a subscribe. So thank you, and back to the conversation. All right. Speaking of just like, we're going through this like clockwork, we have our next caller in. Taro, thank you so much for jumping on. And for those people who are not familiar with all the things that you're doing at Strange Ventures, I also love the ethos behind it. What are you building?
So thank you for asking. My name is Tara. We run Strange Ventures. So Strange Ventures is an early stage fund, pre-seed seed, investing in the future of computing. So that's what we look for. So we invest across the stack, from interfaces to developer tools to infrastructure, really looking at the foundational infrastructure that the future of computing depends on.
There's also, if I remember correctly, there's a design component to this, isn't there?
It's a little bit of a secret sauce. The best scientists or the most brilliant inventors are insanely creative. But part of our value add is that, we dig into the tech. I have a deep tech background, did my master's in computational design at Harvard. And really, I think what we bring to the table is being able to dissect the tech and be able to productize that vision and narrative in incredible experiences and stories. So that's where we come in.
Was that the GSD or in the computer science department?
It was a GSD. Yes, we were very much overlapped with the media lab. So yeah. That's all.
And what year was that?
We're bringing you back. I'm like 2014, I believe. Yes.
Okay, we're all Asian, so it could be multiple decades that could have happened, and I'm not gonna guess. I'm gonna ask, but it could have happened at any decade.
I agree. I always joke with my friends where it's like, I'm Asian, so I'll look like this until I turn 70, and at 71, I'll look like I'm 120.
That meme with the
Yes, I think you have to show. I mean, it's for grandmas, it's not for grandpas, but
That is true. And like, Tara, you also spent a while at a former institution where you had kind of built your venture training in a lot of ways. What was that? I'm kind of like, I don't want to leave the witness here, but like, what was that former institution? How has that informed the way you build Strange?
Yeah, so I had a interesting route to venture. So after Harvard, I went to join a sort of deep tech manufacturing startup that spun out of MIT, and then after that, I joined IDEO really to be part of their venture studio and their deep tech group called Collab Ventures. So IDEO is a global innovation arm firm, and it's been around for, I say, 40 years. It invented things like the first laptop and the first Apple mouse. And they had a deep tech group that was called Collab Ventures, and I was part of that. It's a little bit similar to the Quantum Black Group at McKinsey, is what I call it. So we were looking at all the awesome stuff that was being built up back in 2015, like distributed computing, blockchain, AI, IoT, and all of that good stuff. So I was there, and then for the last 7 years when I was there, we really institutionalized the sort of venture practice. So set up the first fund, did pre-seed, seed deals into sort of the distributed computing era. And then, really, blink of an eye, I've been doing this for 10 years.
That's amazing. My wife got her start, her first career was in broadcast journalism, and she was a fellow at Nightline. So she got to be I think an assistant producer or associate producer on the Nightline episode on the deep dive on IDEO.
Oh, nice. The shopping cart video?
Yes, the shopping cart video from the 90s, I think, right? That was like late 90s, a little while ago.
It has a chokehold on every MBA program across the country for some reason.
It sure does.
A great case study on IDEO. That's awesome.
Tara, you brought Ben a question. And I love that question because I think it's a similar but different lens to the conversation we literally just had. But what is that question?
So thank you for giving me the floor. Ben, I'm curious, when you back a new fund, was there a moment that told you, oh, this GP will be around for Fund 3?
And when you... are you thinking post-investing or pre-investing with the partner, with the firm?
I would say pre-investing.
Okay. So is there a moment of conviction that this firm and this partnership will be around?
For Fund 3. And the reason why I say pre-investment is, there are many reasons, right? Whether investments happened or not, but you guys see hundreds, if not thousands of firms every year.
There are, in the last 2 years, we reviewed over 1,000 opportunity firms. We met with half of them. So in terms of order of magnitude, we have a team here. So across the partnership, that's the scale that we've operated at. And we've been doing that for the last, at that scale, probably for the last decade, but we've been doing emerging managers for the last 20. I'd say one of the really hard things is, in Fund 1, rarely is the partnership at the size that the GPs intend for Fund 3. Usually there's a plan to bring on another partner or two, and a plan to increase fund size, but both very natural. And so I think one of the hard things that we have to do to get conviction and to kind of flip that bit, like you're describing, like to decide, okay, this has a chance to get in there, is if it's a partnership, if it's a single GP who intends to bring on another partner in the next fund, well, then we're going to have 50% of the partnership is going to be new to us, and we will have no ability to underwrite that that partner, what we're underwriting is the original founding partner's ability to attract, the ability to identify and evaluate, and then build a partnership with somebody unknown to us. Same thing for a partnership of two. Actually, how many partners do you have?
It's a solo GP fund right now.
Okay, there you go. Okay, so exactly that. So I'll ask you, do you have an intention to have more partners in the future?
Yes.
So I think that's the challenge for us, and we have gotten there, and that moment. It isn't a moment. It is we build a conviction on what's available to us in the time. So on the single GP in Fund 1, and then there's we go through a process of evaluating the risks that we're going to encounter, and we expect there to be risks, of course. Like otherwise we wouldn't. That's investing. But that often the future partner, the unidentified partner, is oftentimes the largest risk that we have to decide to accept. So there actually isn't a moment where we decide this GP is going to be around for Fund 3. It's actually the dominating risk that we look at, and we get there, but it's a preponderance of other things that we need to build our conviction so high that we're willing to take that risk. Because ultimately, that's one of the largest risks you're going to take is when you hire your, when either you hire in a partner at your level or you grow talent from within. But the point at which somebody comes in to be a significant partner to you, regardless of it equal or not, that'll be a major inflection point for your practice. Mm-hmm. And in some ways, actually, I don't think you can predict exactly how they'll go either. That's the risk you take whenever you do it.
Is there to follow up on that, is there a motivational underwriting that you have? Like knowing that the partnership will increase by Fund 3, you have, say, half the equation right now. You can't predict the other half. What do you do with the half that you within reason can predict? In the sense of, so let's take Tara's example, right? Tara may bring on an additional partner by Fund 3 in Strange. Mm-hmm. You don't have that. She doesn't know that. She may have people in the pipeline, but no one really knows how they work together. And let's just say you don't know what that looks like to a Fund 3, but at a Fund 1, whether it's like, I'm going to keep Tara in the pipeline, we're going to track Tara, or we're going to make a commitment now, but we'll see how this evolves over time. What do you do from a motivational standpoint for underwriting when you look at Tara today?
I think I'm motivational. What do you mean by motivational?
Motivational as in like, how do you know that Tara wants to do this for the next 20 years?
Oh, it's her motivation. Sorry. Okay.
Her motivation. Yeah. Sorry. Her motivation.
I think that's a great, that's a really good question, because I think it's always specific to the strategy and the firm. And not all, there's risks to building a partnership. There's risks to being a solo GP or to being a small partnership. There's risks. There's risk all over the place. That's just that we're in the investing business, so that's just inherent to it. We want to understand both, Tara, in your case, your personal motivation to bring on a partner in the future, and how that fits with the strategy that you've chosen for Strange Ventures, and both of those things, your motivation usually doesn't change that much. So whatever your personal ambition and motivation is, like that's probably going to be consistent, and we want to understand you as a person, and that's a huge part. But your strategy may or may not change. But understand the fit of that, and is this actually the right thing for this strategy? I think there's some cases where we do invest very rarely with single GPs or small partnerships that don't intend to increase, and that's actually very attractive from a risk standpoint, because then we know exactly what we're getting. We have the other risks of if it's small, then there's always the hit by the bus risk, and then the motivation risk of, do they decide to not do this? We actually have this. We're looking at something right now where there's a question of this largely rests on one GP. Are they going to continue to be motivated to do this for the long arc of our relationship for the next 10 years? A long time to try to predict the future.
Yeah. Yeah, I mean, it's interesting. I turned 40 last year. And when I started Strange, I kind of realized that this would have to be a 30-year journey for me for it to be worth it. Doing it for 2 years or 5 years is actually not worth the pain. It's not worth the pain. It's like extremely painful. Opportunity cost is high. I mean, it's like, it's brutal, you know? It's a 30-year journey for any GP who raises a single dollar from external LPs. It's a 30-year journey. I don't think, I think that sentiment I totally agree with, and I wish it was more prevalent in this industry, because this is a multi-decade business. Like, you have to be in it for a long haul. But yeah, I would say, partnerships are tricky. At IDEO, we were in, 5-person partnerships. We had 2-people partnerships. We had 3-person partnerships for different funds. All of them had different dynamics as well. And all the drama that comes with it. I'm sure you've seen your fair share.
You've seen our fair share.
Yes.
Absolutely.
Yeah.
To maybe like one last follow-up on this, which I think is a really interesting question. Let's say Tara, hypothetically, has someone in mind already. What is the best way she can tee up that person to you, the LP, to show that this is a co-GP by Fund 3?
I think if a prospective LP has the interest level I think it's rare, but if they're willing to spend time with you and that future potential GP, that's a high level investment for an LP to do that, and I think that'd be the most impactful way to do it. The reality is sort of like when you're meeting with prospective founders. There's a huge distinction between somebody who's thinking about an idea and somebody who's quit their job to do the idea. So that like, and you need to manage your deal flow. So you will I'm sure you meet with folks before they've actually started, but you get serious when they're serious. And we use simple things like, well, do you not have it? Are you willing to walk away from a paycheck to do that? In a similar way, for an LP, is a GP willing to walk away from their, whatever their other day job is, or and then more importantly, sign up for to be, to your point, married. Like, you're building a partnership. It is a marriage, but it is a long-term commitment that is hard to unwind, very painful to build and very painful to take apart. And so it's not done lightly. So that step is a big step. We tend to look for that as like the indicator of like, yeah, they're gonna do this.
There's a line that Duvos said on the pod, which has been reiterated a couple times, which is the average partnership lasts longer than the average American marriage, or twice as long as the average American marriage.
American marriage, like 50%, 60% success rate or something like that.
Although apparently marriage rates way down right now, right? In the last like 3 or 4 years or 5 years, but divorce rates also apparently way down. I don't know. I didn't give the number on the stat on how far down, but apparently divorce rates are down.
I'm no expert on romance, but I think that's an interesting thing to think about. Tara, do you have any other follow-up questions for Ben here?
Yeah, I guess on that topic, we're talking about partners, we're talking about longevity. What do you think a Fund 1 manager should do today to start institutionalizing the fund for Fund 3 and beyond?
I think there's a good practice in communicating formally with your investors, and it can take different forms. And you find the right way for you and your investors. Usually, in a Fund 1, LPs have a lower expectation, or they're different kind. Oftentimes there's their relationships, and so friends and family, where they're not expecting, or maybe would they even read or spend time getting a formal report. But have a more formal communication and having that discipline for yourself, I think it's like the value of having a board as a founder. You don't need like a formal board meeting, but having a regular cadence with your board as a founder helps you step out of the craziness day to day of being in the trenches, and I think if done well, it can give a founder for their startup, or can give a GP for their fund the the opportunity to be more thoughtful and intentional about what you're building over the long period. So I think in Fund 1, just kind of taking the time, which is hard to do, right? Take the time to write a letter, to do a more formal like update on the fund, even if your LPs aren't looking for it. I think that can be a good practice.
Amazing. Thank you.
How often should that cadence be? Weekly, monthly, quarterly, annually?
We debate this ourselves, and we've been in business for 26 years. We're confident that most of our LPs don't read anything that we share with them, but there are some that read every single word, and so there's no right answer there. But I think just having some formal cadence at least once a year. And there's a storied venture firm that 30 years in, I remember being at their annual meeting, and a really famous venture capital firm that will go unnamed, and the GP who had been there for a long time also had been in charge, but wasn't the original founder, welcomed the audience to their second ever LP meeting. And they just had never needed to. They had phone calls and being in relationship, which has its own charm, I think. But not every firm does it. And so I think at least once a year, which is not a high bar, but it does take time. And we do our annual meeting. It takes a lot of time to sit down and really be thoughtful and to treat our LPs time as something that's really precious to us.
I'm starting. Go for it.
You have that question?
We have, let's say, like another minute. If your spicy question gets a quick response.
It's related. So I'm curious. So like with these LP letters, would you advise GPs or funds to share their insights and internal thinkings to a broader prospective investor community, or just their current LPs? So I'm kind of curious about like where that lies. And this is a little bit spicy because I'm like, well, yeah, we should share more and we should stay top of mind. But I'm curious about, is there, and I know GPs sit on either fence. I've spoken to GPs who sit on either fence.
I think you want to treat it like something that is very precious and proprietary and worth hiding. But I think it's a great way to share, if you are a writer, and I don't think writing is the way that you have to do it, but if you are a writer and you put thoughts to paper, digital paper, I think it's a great way to share broadly, to show, not only to show what you're thinking right now and to have a lot of people to get to know you, but it also becomes an artifact that you can point back to. And in 2 years, if the world's changed, but you're still doing what you committed to, you can show your commitment to it from that artifact. I think that's also valuable.
Tara, I appreciate you.
Great to meet you, Tara.
Thank you so much.
Thanks for having me on.
Thanks.
See you soon.
This is fun. It goes fast.
It goes fast. Like you feel like
they find it fun because they don't have the context of the other conversation.
They don't. I mean, they will eventually when all this goes out, but at the same time, they don't. And so I love when I saw Tara's question, I was like, this is really similar to Miguel's question. But whereas Miguel is a little further along in his journey, Tara is at the beginning of her journey. And at the same time, they're both looking at this prospective, let's say Fund 3, Fund 4. What does that necessarily look like?
Yeah. I think that is the existential. I don't think anybody goes into this business to raise capital, but your ability to raise capital is ultimately what allows you to be in this business.
True. And as you mentioned earlier, Miguel's kind of your answer to Miguel, like the cadence in which you do is a function of like the appetite in the LP market as well.
Yeah.
Anyways, we've got Arkady. I'm going to let him in. Our final caller for this session. Arkady, what's up?
How's it going, Arkady?
Hi, David. Hi, Ben. Thank you for the invitation.
Arkady, for those of you who don't know, for Ben, I believe, who has yet to meet you, what is your story into venture and what is Arkane?
I've been an entrepreneur since I was 18, and I always wanted to build things, and I always wanted to build something in real life. My first business was in music. Then I built businesses in IT, and all of that is not really tangible. I wanted to do something in real life in hardware sector, in physics-enabled stuff. I've got theoretical physics background, so I understand physics, I want to say intuitively, but that's not true. I've spent 6 years of my life to understand it intuitively. So I built a fund.
Only theoretically, not in the real world.
Oh, of course, no. Quantum physics is still not understood by anyone. That's very true. What is the promise that a lecturer gives you on a first quantum physics lecture? He's like, so far, only I'm the guy who doesn't understand quantum physics. By the end of the semester, nobody in this room will understand quantum physics.
Yeah.
So this is very true. And I moved to the US in 2020 to do something in real life, in real world with physical products. I maybe thought about a startup or something like that. Very quickly, I realized that all deep tech startups have the same issues, that they're talking about tensor multiplication and specific forces applied, while investors want to hear LTV and CAC numbers. So it was a dialogue of a deaf person and a blind person, and that's how my first fund launched. And now we're working on Arkane. Arkane continues this tradition of scientifically validated breakthroughs, and we have supercharged our strategy because now we are the first checks in, not any pre-seed or seed check. And we also invest in hidden needs, in the needs that are underserved and that are not very visible, maybe not deemed sexy by community or not getting enough clout. Things like neurodegeneration, things like access to clean water, and so on and so forth. So we're investing in hidden needs at Arkane.
I love it. And I believe you have brought a really interesting question to Ben over here. What is that question?
Sure. So Ben, here's my question for you. I am a strong believer that community defines everything in the early stage company, whether it's a venture fund or a startup, or even if it's an early group of friends who play board games together. So community is critically important. And so far, I had a luxury of selecting LPs from thousands and thousands of high net worth individuals and family offices, and I can pick the people who would be a great fit for my community, who would love to see each other every year on our AGMs, who would love to talk about different things in life. As I'm transitioning more towards institutional LPs, how can I apply, or maybe how I should rebalance in my own head, this weight of how good of a fit that person is to community with the fact that now I'm confined in the realm of hundreds of LPs, if not less than that. Should I start putting less weight on that parameter of community fit? Should I keep the weight and just be still as speaky as I was with high net worth individuals? What's your take on this question, Ben? How do I build community with institutional LP representatives?
It's a good question. And it's something that is near and dear to our heart because we're an LP, but we're a fund of funds. So we have our own LPs ourselves. So we fundraise, and we've built our practice, our strategy, also on community. So a lot of my kids in elementary school, they do this, like the connection, connection with.
Yes.
Okay. Is that a thing?
Is this the thing? That is a thing. So for those listening on audio, what Ben just did is he picked up his thumb and pinky, and the rest is still in a fist format. It's kind of like this. You're at a concert, and I don't know what this. But he's pointing.
I thought it's a
the
surfing
thumb to himself
sign.
and the pinky towards the other person.
Yeah, and saying connection. Yeah, connection. Agreement, a lot of connection in terms of the ethos and value, but also strategically, it's valuable. If you can connect them together as LPs, they're just more committed and engaged with you and more likely to continue to invest. But most LPs have made a financial investment, and that's the extent of the. There might be more beyond it, but the important thing is the financial investment. If you've selected them for engagement and they have a value to bring into it, then there's the community itself can be of value to, I presume, to the investing, to the founders you're doing, you work with. And we've done the same. We have we've brought together founders and VCs that we invest into on the investment side with our LPs. One group are philanthropic families and institutions who use their investment with us to give away to charity. So we've been able to distribute just shy of $3 billion this month to charitable causes through venture returns, through just our distribution checks. They promise to give it away. And then we also have a group of really interesting professional athletes and celebrities who have a lot of cultural capital, which is extremely valuable to founders and VCs trying to change the world with tech. But that's to say that we've also had that filter of, we want to work with people who share our values and who care about what we're doing, but also who want to engage And if we can get them to engage, then we've been able to unlock value for our investments. And we've asked this question you're asking ourselves over the decades now we've been doing this, of you start with, our first fund had 39 individual LPs, and they were friends of friends of friends and all individual checks, no institutions. And today we're about half institutional checks and half families and individuals. And the institutions we found is, because they tend to be on the philanthropic side for us. And so they are philanthropic endowments, foundations. So they are aligned with kind of the values of what we ask for in that flagship fund that's philanthropic for us. But we often are simply just an investment for them. And so they bring capital, which is valuable, but and they'll come to the annual meeting often, but they're in the annual meeting, they're looking for financial returns and financial performance updates. They're not going to necessarily engage with the community on the other stuff, on the non-financial stuff. Mm-hmm. But we found that it still works, where as long as you have a critical mass, and particularly we set the tone of our gatherings with the individuals originally, and so we still are able to hold on to that sense of community, even though the actual LP base has diversified a bit beyond the individuals that we originally focused on.
Thank you, man. That gives me exactly what I need. So rebalance my thinking around that a little bit. Don't try to make every single LP a proper community member that's fully engaged. Don't press people into the situations they don't want to participate in. That's very useful. Thank you very much, man.
Yeah.
And just to ask for my own clarification here, when you say critical mass, does that mean, let's say you have 30 LPs, you can't have it's if you have 29 who are financially driven and one is strategically driven, that's not critical mass for the strategically driven one,
right?
Versus if you have 10 strategically driven, 10 financially driven, 10 charitably driven, you'll have critical mass of each because they operate as a meaningful percentage of your LP base.
Yeah, I think there's different ways. I know, Arkady, I don't know how you. I'm sure you bring your community. When you say community, you must bring people together in person or virtually. Like the relationship and the connection is what a community is. And for us, we found different ways to bring them together. And so the critical mass number is different for different formats of engagement. And there's also just the affinity. Do they identify as being part of a community, regardless of whether they're are they somewhere else and saying they're part of this community? That's also a community. And there's a different critical mass for that too. We today have over 1,000 LPs. We have a very large LP base, and we have tiny little checks and some larger institutional checks and the whole range. We have the whole range of large events where we'll gather hundreds of LPs together for an annual meeting or for a philanthropy conference or a tech conference we do in the summer. But we found that even at this size, one of our most popular formats is actually a private dinner. We call it Jeffersonian dinner, with 10 people around a table. But we're doing one tonight with GPs actually. And that critical mass wise, it doesn't matter actually how many institutional LPs you might have in your community. When you curate a dinner together, you can select the subset of your community who wants to engage and can bring the kind of value you're looking to bring. And so that format's still, I think we did 50 or 60 of those dinners in this past year.
Holy cow.
Yeah. Because it's so, because our community loves it so much, because they find it such a unique way. And it's so different than when they walk into a room with a couple hundred people from the community also. It's a very different kind of engagement. And we didn't do that scale event, 15 years ago when our community was smaller. So the small dinner has been a really powerful way for us to stitch the community together, but also maintain that intimacy as the community grows and as it diversifies. I think your core question, Arkady, is how much diversity, in the technical term of diversity, how much diversity do you have in our community? Can you tolerate before you lose a sense of community?
Absolutely correct. Yes. And I see that. And the second answer to my question is use different tools to engage people at the different size of your community. If you have 200 LPs, don't try to stick all of them in the same room, maybe once a year. But then if you want to foster better relationships with that or another LP or a certain group of LPs interested in a specific topic, do a specific thing for those people only. And yeah, that makes total sense. Just do more events more often and as your community grows. Thank you very much, Ben. That was very useful.
Yeah, great question. Great to meet you, Arkady.
Great to meet you, Ben.
Arkady, I also
thank you
feel
for the invite. Yeah, appreciate it.
Yeah. Thank you for being on. And I also feel like you're doing this already, maybe opportunistically now, but going to what Ben mentioned earlier, there might be a certain cadence that you might commit yourself to. I will mention this, and Arkady, you let me know if you want me this to go out in public, but you host some of the best board game nights out there. B, some of the best tea ceremonies out there. Like if I kid you not, Arkady is what would you say classically trained in like tea ceremonies.
I don't know about
what
classically,
culture?
definitely trained. Chinese
Chinese, okay.
tea ceremony, yeah.
And he's got all the tools for it, but these are things that you're doing on the side for people in your community already, maybe not as like consistently, but does happen. And then every time I go to one, it sounds like everyone there loves them.
Yeah, thank you very much for the plug-in here, David. I need to take a page from Ben's playbook and do them more consistently. So far, it's mostly social calls, just a group of 4 or 5 people, but maybe I want to host more people. Maybe I want to do it a little bit more on a regular basis, run tea ceremonies once a month or something like that, maybe once a week. That's also a good idea. Board games. David, you're invited in December. We need to reconnect via text messages. Ben, if you want to join us for a board game session, let me know.
What's the most popular? What are the top 2 or 3 board games you play?
Terraforming Mars. It's a strategy game about terraforming Mars, about building cities and forests and oceans on the surface of the red planet. It's a lot of fun.
I will say Arkady is really good at making you feel good about losing. So I would like to call that out, because I remember I thought I did really well until we started counting the points, only to know that both Arkady and his wife had outpaced us by a long mile, but made us feel good in losing.
That's not true, though. Not by a long mile.
Oh, okay, sure. Tomato at that point. Anyways, Arkady, thank you so much for your question, and I really do appreciate you.
Thank you very much for the invitation. Ben, thanks a lot for the answer. That is very helpful to me as we are getting into this next chapter.
I love the question. Great to meet you, Arkady.
Looking forward to hosting for a tea session or a board game, whatever floats your boat.
I love it. Both.
Thank you, guys.
All right.
Have an amazing week.
Goodbye.
Talk soon. Stay awesome. As we round out the corner here, we had the 3 folks who called in, all with similar but different flavors of questions. A lot of this was catalyzing people that you didn't know well. How do you tell the story to people that you don't know well, and how do you bring them into the fold? Something you might have built recently or something you might have built for a while. And so I have one last question for you, Ben, as you round the corner here, as we kind of surmise everything. There's a quote I came across fairly recently, and it's by Kurt Vonnegut, who is by far just a phenomenal writer. And he says, most letters from a parent contain a parent's own lost dreams disguised as good advice. So what is your parting good advice you'd like to share with our audience today?
Our own lost dreams disguised as good advice. That's good. That's a good quote. I think parting advice, and the questions were all around fundraising appropriately. And I think that the best encouragement, I don't know if this is a lost dream or not. Maybe this is self-talk, and that's the lost dream. But I think that the encouragement I give to Arkady and Tara and Miguel, and I think all the emerging managers and established managers that are raising capital, fundraising is a journey of finding investors who want what you have to offer. It's not convincing somebody to do something. It's they this is the right thing for them. You're finding them, and there are times when those prospective investors are easy to find, and they line up at the door. And there are other times when they don't know that they're not aware of their own desire for it. And so it's harder to find them. This is, I think, the era we're in right now. It's harder to find investors for venture firms. That all has to do with the environment. And it makes the journey a little longer, but it's a journey either way. And it's a lot has to do with the environment. So I just leave the parting advice of continue, find a way to enjoy that journey. When it goes fast, enjoy the fastness of it. When it takes a long time, find a way to enjoy the challenge, the learning. Find companions to go on the journey with you to make the journey more fun. But find a way to enjoy that, regardless of, and recognize that the journey has to do with the environment and not just you.
I also really love something you said at the beginning of that advice, which is it's not about convincing someone who doesn't already believe in you. It is about just finding the person who already does or may not know they do. And I see this quite often. I don't know about you. I'm curious if you do, where I would, let's say no to a manager or a founder. And they would be like, David, you're actually wrong. You don't understand something. Let me convince you on why we actually have what you want. I'm like, I know, maybe I understood it wrong, but most of the times I feel like I am head above two shoulders.
Yeah, I think that's right. Yeah, I think a lot of, to start a venture firm, you've got to have a lot of belief in ideas. So you do want to convince the world that you're right. But at the same time, and the most effective way to do that is to find where someone already agrees with you and convince them that what they think and what they believe actually is consistent, and you're actually the perfect complement to their existing beliefs.
I love it. Sage advice, good parenting advice for all the emerging managers out there, or just managers out there, period. Anyone who is in market today.
Parenting advice. I hope kids don't I don't like kids to do that. I don't like kids to convince me that what they want is actually what I want. So I hope my kids don't listen to this podcast.
You never know. I mean, it is on YouTube, and if this stumbles across their YouTube feed where they see their dad on it, and they somehow get to the end of, yes, they will bring it up. I do think that I think algorithms should surface both nutritional as well as sugar consumption content in general. But unfortunately, it's all sugar right now, and I hope it's otherwise. Ben, I mentioned this at the beginning. You've been on the most out of every single guest I've had on, and for good reason. You are always a phenomenal sparring partner, and I thoroughly enjoy it. Thank you for all your advice.
And thank you for having me. I feel like I'm nervous that I'm that guest at the party that is still there. and we've cleaned everything up, but it's still there.
No. Let's reframe that. It's you get invited to several parties. You're usually one of the early ones who do leave, and everyone still wants more of your time. But unfortunately, you've got things to do, just like you have things to do after this. But I'm the one who always invites you back, and you so graciously still spend your time with me.
I appreciate the invitation. It is fun. I do it because it's super fun, and I think you do an amazing job bringing together interesting conversations. So I appreciate you, and I say yes because it's I learn something every time, and I have a good time doing it too.
I am by far the dumbest person in the room. I'm merely a steward for conversation. So all the beauty of all of this is you and our other guests, as well as you yourself. Anyways, I'll let you go. Happy holidays. It's all Superclusters fans. We'll see you soon. Let me know down in the comments or on socials if we should do more of these. I hope you enjoyed today's episode with the one and only Ben. And I highly recommend checking out our earlier episodes on Superclusters. And it's not just one, not two, but three. And really the third one is split into part 1, part 2, and part 3. And it's so hard to just pick one moment because Ben is host of so many of Superclusters' greatest sound bites. And just to give you a flavor, he said things like, most entrepreneurs think it's going to be like the Michael Keaton version, and the good ones, they actually have to work through the Christopher Nolan version of Batman. Or here's another, we overcomplicate almost nothing as LPs, and this is a criticism to myself, and I think we oversimplify everything. Because by definition, we're the customer of the end product. LPs watch the movie, but don't read the book. And here's one more. The job and the role that goes most unseen by LPs and everybody else outside the firm is the role of the culture keeper. And so you've seen kind of all of this, but if I really had to pick just one moment, this is the one.
Yeah, so there's two things that we look for when we're trying to test this long-term question. And it's an important part of how we get to know a partnership, a firm, either in the first meeting or over time, honestly. And it's a combination of two extremes. Do they have long-term vision, and is that long-term vision rooted in the nitty-gritty details? So vision and details. So a question that we like to ask on vision is, describe your partnership 3 funds from now. Just like 3 funds, which is 6 to 10 years from now, and on the firm, what does your partnership look like? It's far enough out that they can't name the person, the new partners, but they can talk about their aspirations and what that might mean for the firm and the practice and the strategy. Because to us, the atomic unit of value in a venture firm is the partner. And you build a firm around the partnership. So describing the partnership is kind of a way to describe a different kind of firm they want to be through the lens of that atomic unit, the partner. So that's one favorite question. Another question we'll ask to test sort of how in the details they are about their partnership today, as an indicator of how they think about their long-term partnership is, if we get multiple partners in a room together, we'll ask them, pick one of your partners and tell us what their superpower is. And just go around the room and just describe your partner's superpower. And again, it's a way, obviously, do they know each other? But more, do they see each other through the lens of how they complement each other? And oftentimes the way they describe it is not just a superpower, but it's a strength that complements the others in the room. And that's a way to get at, are they thinking about building a partnership and not just hiring a person or deploying capital, all those things. And one other question on nitty gritty and details is, but still in the long-term context, is take a portfolio construction model. And I'll often ask, after they describe the strategy, like this number of investments, this average check, this much ownership, reserves, then I'll say, step back from that. What does it look like for when this fund is successful? Whatever number that is, whatever multiple it is, what will the largest winner in your portfolio look like? And some GPs are, especially when they're just getting started, just looking for good deals, but they haven't done the really simple math of, okay, if I'm going to write this size check in this size fund, I need to have this many $1 billion outcome for my largest company to drive this size outcome of my fund. And it's just arithmetic that, a third or fourth grader can do, but you just get caught up in, and it's so very, nobody wants to say, well, I'm going to invest in today and have a company that's going to be worth $5 billion. But actually that's what we're all banking on. So if they haven't done that math, that's a telling thing too. They're hoping, but hope's not a strategy.
Hey, Superclusters fans, you made it past the snap, you didn't disappear yet, so I have a mini message for you. If you enjoyed today's episode, if I might be so bold, I have 2 favors to ask of you before you go back to the holiday turkeys and the sledding down fresh slopes of fresh powder. 1, there's a big red subscribe button down here. I think it's here. Not the red that I'm wearing. If you're on YouTube, if you liked what you heard today, that's the holiday cheer for this episode. And that truly is filling the stockings for us. And I promise that we will do our best to give you the most profound questions answered by the most profound, and experienced allocators as well. And if you want more of what you heard from Ben today, that's the magic button. 2, I know every single one of you knows something that I don't and has a question I've never thought to ever ask. So I'd love to hear your thoughts and curiosities down in the comments. So the next time you tune in, you hear the answers to the questions that you would like to know. I promised myself I record 100 episodes of Superclusters, so every comment, question, and review makes this experience more meaningful and helpful to you, and makes investing in venture a little less scary and a lot more friendly. Lastly, I want to share a quick disclaimer. The views expressed in this podcast are for informational and educational purposes only and are solely the views of myself and the guest alone. They are not representative of any organization that we are a part of. None of the views expressed herein constitute legal, investment, tax, or business advice. Any allusions or references to funds or companies are for illustrative purposes only and should not be relied upon as investment recommendations. Consult a professional investment advisor prior to making any investment decisions. And until the next, I'll see you soon.